is going to invest 250K to 1.2 million from post-seed to Series A. What bothers me in this is that it's a lot of public funding. It's your money, my money, or
they want the fast growth. They go to the US.
They can just keep investing for eternity. I just jumped on my bike, and when I got in, I saw a couple of Chinese guys leaving. The mindset in Estonia is my startup needs to become a unicorn.
The value creation is shifting.
In the Web3 space, you have huge competitors already. This is not fostering really the next unicorns in Europe. The henchmen guys are also a mafia.
There's this misconception that Thomas, welcome to our first episode of VentureTales. Thank you very much for joining.
Pleasure. Let's go.
Yeah, as a usual process, let's go into an introduction. Let us know a little bit about your journey and how you have developed yourself into the startup world and to the VC world.
Yeah, sure. So I think for a lot of people, it seems like really far off and you need to get into it like crazy ways and have crazy degrees, which is something that I find not to be true. I think you need to be creative. So for me, it was very normal, consulting for the first couple of years, strategic consulting in Montreal in Web3. Before that in Belgium, KPMG, fraud investigation, like really the usual things. And then at one point, one of my friends had a startup and he was like, yeah, we need someone to help us out. And that was in microfinance and solar energy it was a Belgian company with a subsidiary in Cameroon. So I became COO. We scaled the company to 35 people and I left.
Mm-hmm.
During all that time, I actually just was raising funds for friends, like, little amounts, 1,000 here, 1,000 there, putting it together into a little syndicate. And then we would invest this in a startup. And that's really how it started. And that's something that we did on the side, in the evening, raising money for those startups. And that's really how it started. The first one I did was maybe one that is quite known now. It was Wheelair, which was a medical device. And the second was Engrave, which is a hardware wallet that is still alive today. And when you do pre-seed, I would say it's quite exceptional that after 7 years, your investments are still there. So that's really how I got into it. It's like just little amounts with friends, putting it together and pooling our capital into a startup. And this way you have a seat on the board or an observer seat, or at least you're in that market.
I had a look in your background. It was interesting that you went through all the positions. So you started in corporate. I saw KPMG. The moment you left, actually, it was exactly the moment I joined KPMG,
Okay.
which is a fun fact.
What did you do there?
I started doing due diligence and risk, and then I transitioned to projects and program management.
Okay. Nice.
Yeah. You went into freelance with advisory. You did, of course, operations, as you mentioned, as COO. I saw you also involved in ScaleFund. If you can talk a bit about what are you doing there and what is the overall strategy of the fund itself?
Yeah, so there's 3 parts of what I'm trying to do today. One is pre-seed. So that's the part with the friends where we get in really early. That's something that we do personally or with Forward Ventures. And with that, we also go later stage where we try to do secondaries. And the secondary market is really a market that is interesting right now because since Lena Khan left, there is more opportunity for IPOs and that market is opening up again. So secondaries are really important for liquidity for the funds like ScaleFund. And ScaleFund is going to be post-seed, pre-Series A. So really that gap where it's quite hard for startups to find funding because either they go pre-seed, seed, everything goes well, the product picks up, and then they will go to a big Series A, and there you have a lot of funds. However, you have a couple that have a harder time to raise, and the product market fit takes a bit longer, and those often find themselves in a bit of a death trap where it's not a bad product. It's not a bad team, but there's work needed. There's more work needed. And what ScaleFund will do is we're quite a small fund. You could call it almost a boutique fund. And that fund is going to invest 250K to 1.2 million from post seed to Series A. There's only 5 startups investments per partner principal. So that means that I will be taking care of 5 startups only. Why is this interesting? Because we actually have time. And by time, I mean, we invested now, we're in the process of investing in a cybersecurity company. And I've already started reaching out to CISOs. Why? Just because I know at one point is going to help them to make introductions, to do sales. And because we have quite some interest in cybersecurity, I need to strengthen my network in this.
Yes.
So we really try to help. We help with strategy, HR, finding the right people. And sometimes, oftentimes we start talking pre-seed, and then from that point on, we already try to help.
Yeah. So it seems like you're quite active investor, because I have seen that there are two types. One, like you mentioned, that you're hands-on involved, try to help the growth, and there's also another side where it's mostly financial support.
We don't have the luxury, I would say, to and one of them dies. That's 20% of my responsibility. Gone.
Absolutely. And how do you go about sourcing those opportunities? So is it mostly inbound to you through network, or do you use any tools that you try to source these opportunities?
So if you're a 50 million fund, you can really use tools. That's absolutely true. And those tools are going to scrape LinkedIn for example, they're going to see stealth mode. Bam, you're going to be contacted. That kind of strategy for us, it's not possible because we are too small
Mhm.
to do this. So for us, it's really a lot about network and going to university events, talking to friends. Friends of mine refer a lot of startups to me,
Yeah.
and you have to build a name for yourself, and you have to actually honestly be a nice guy. If you're a startups will not refer other startups to you. However, if you help and you accept, and I do accept that there's a lot of startups that I will help for a year, find them people, make introductions, and in the end, they're not going to go with us. Yeah, okay. It happens, and that's okay. In the end, I really try to have this mentality of saying it's not about the fund necessarily, it's about creating jobs and companies in Europe. The company gets funded and it creates 1,000 jobs in the next 5 years in Belgium, France, Luxembourg. I consider it to be a win. And if I helped a little bit and we didn't get to invest, okay, maybe next time.
Actually, you touched a couple of points that I really would like to hear your opinion on. First of all, you mentioned stealth. There is a lot of discussion online if it's a good thing, a bad thing, if you should build in public or not. What is your take on it? Do you think it's better to, from the first day, try to have exposure, or to try to launch with something more established?
From VC perspective, I don't mind. Like I see what the problem would be. Where I see, however, a problem is when there's a lot of governmental funding and no private funding. When it's non-dilutive and the guys have never had a startup before, what we tend to see is that the longer the private money stays out, the less chance a startup will succeed. And so what bothers me in this is that it's a lot of public funding. It's your money, my money, or taxpayers' money that goes to startups that not really have the right environment. And the right environment is really key to you being successful. So even if it's an advisory board, you need an advisory board with a couple of guys that have done it privately and not an advisory board with 3 people from the government. I'm not saying they're bad or anything, but it's just a different take. It's a very different way of approaching things. Liquidity events for them are way less important because usually it's open-ended funds. They don't need to return money to anyone. They can just keep investing for eternity. So I would say stealth mode, no problem, but part of a bigger problem to me is more like public funding.
Yeah. And I guess you see this problem throughout Europe, right? It's not like a Belgium specific or France specific, because we all know the fragmentation in the European Union. That's one of the hot topics nowadays when the whole discussion happens between can we compete against Silicon Valley, etc. You know, all these things. What is your.
I actually talked to someone who works in Silicon Valley,
Mhm.
and the last thing, like face-to-face information that I heard is that even there right now, it's a bit the the mindset is pretty depressed. I don't know why.
Hmm.
And I think that here in Europe, there is a bit of a, not a bit, there is an awakening because we, for example, now are really funding companies where we want them to be EU centered. Like,
Yes.
for example, they need to be vertically integrated into the EU. And I mean from data centers
Hmm.
to devs to really who they serve.
Yeah.
And I think that this is really a gift that America has given us by saying, like, we're gonna do our thing and Europe has to stand on its own legs. And it
Yeah.
has had the right impact.
Yeah, yeah, it's interesting because I agree with you in that point that the last few years Europe is doing the right things, and they have Europe. I mean, the startups themselves and the investors. I don't know about the governments and the legislation. That's another point. But an important point that you mentioned there is that it's part of the integration to also go for the customer base in Europe. Because what I see in general from the outside is that they start here, but because they want the fast growth, they go to the US for customer base.
I totally agree. And I think that IPOing on Euronext is really too expensive for what it brings to you. And I actually had a lecture not that long ago. I think it's a year and a half ago. And it was a guy, let's say, from Euronext who came to, pitch Euronext, why you should go IPO. And there was a guy on my side of the table, I would say. So one of the people listening who said, I considered it. And I actually knew him. He exited his company, like good big exit. And he said, like, we didn't do it because it wouldn't bring enough money. There was no advantages almost to it. And in the end, we exited privately. We all made more money for less fuzz than to go on Euronext. And then the guy from Euronext really tried to sell his spiel, I would say. And the topic of blockchain came up. And that was really revealing because he had a slide with the actual tulip charts. And to me, this was very revealing. I was like, okay, but if you guys are still in that mindset about new technology like blockchain, which is being implemented left and right in America in the NASDAQ, how do you deserve to even have IPOs being done in Europe? If that is really the mindset. And the I want to believe that the lecturer was an isolated case inside the organization. And I hope and I want it to be this way. But I really am scared sometimes when I see these things because I'm thinking this could be, and this probably is, a prevalent thinking within those older organizations in Europe where it's hard to grow as a young person. The European Commission, the European Union in general, the institutions. I really hope that they get to the point where they are innovation driven and that they are not the blocking us. And I had quite a few touch points with European institutions, I will call it, where they reach out to go to a session in the parliament so you can listen. And then in the end, I said, well, we can have lunch, we can talk about what we see in VC. Maybe there's some help to be done. And the reply I got was like, no, you have to fill out this consultation form and we'll look at it. And to me, it really sounded like Star Wars and the Empire, when that scene when Layla is saying, this is how, democracy dies. I was really thinking the same. Like, so I need to fill out this link, put time in this with no certainty that anyone is going to listen because you're not even willing to have lunch 45 minutes or 1 hour to really talk about what do we see, what is necessary on the startup side, what are they struggling with. We can just have this conversation. And that was not possible. When it comes to leaving the EU for deeper capital markets, I think we're definitely in the fight still, but I hope that it changes and it has to change quickly.
I saw another point online which was very interesting, and I would like to hear your thoughts. So everyone is talking about some specific startups in Europe that are growing and giving visibility to the European market. But these companies are based and headquartered in Europe. They're operating here, but they're incorporated legally in the US. So
Yeah,
all the
Delaware.
taxes and benefits are going there. And me personally, I wasn't aware of all this complexity. So it was a very interesting fact, and I would love to hear your thoughts.
It's a tricky one. Honestly, it is. So ScaleFund is a venture capital fund. We have an investment committee and we do have some public funding. What that means is basically that we need to serve the European interests. We cannot just invest
Yeah.
in American companies, which we would like to do, but that's, it's a whole other ball game. And what we do see a lot is indeed company getting incorporated in Delaware, and then they come and get subsidies in Europe with a subsidiary. If I was a founder, I would do the same. But they also fall into a special category, I would say, because they want American valuations and they are operating half here, half there. So it's a strange kind of environment for these companies. And I think it's totally possible and you should look into it, but you cannot come to, well, it's difficult to come to Belgium, France, Luxembourg and be like, okay, I'm worth 20 million pre-seed. I have no sales, half an MVP. We're gonna struggle to invest in this, except if you're a 2, 3 time founder, you sold a couple of times. And I really tried to push it down the throat of the investment committee, which happens, like legally, we it's not that we don't want to invest, but it creates a couple of challenges and we don't shy away from it. Absolutely not. At Scale Fund, we've done interesting things and it's also nice to be creative and find a way of investing in those interesting companies, but it's something that really has to be thought through. Where are we going to grow? Where are we going to raise our money? Are we going to move? And are we really going to get that American market?
I want to touch a bit on the industry. So I saw that ScaleFund is specializing in Web3, blockchain, and digital transformation. What are some trends that you see or some opportunities in the market that made you go towards this direction?
Yeah, so important is with Scale Fund, we are more into deep tech, clean tech, and digital transformation of old industry. So blockchain is something that has not been invested in yet by Scale Fund, but this third fund is now open to this. So I wouldn't say we're specialized in this, but we're open to it. And if we
Okay.
invest in it, it will probably be fintech or real world assets, which is no surprise. What I would say we see, for example, in deep tech, the trends there are definitely everything with space. So chips for energy efficiency in space is startups that we have seen. There's a lot of them now really working hard on this space race. Chips in general, encrypted chips. We saw a Belgian company just raised a really nice seed round, I think, of 6 million with American partners. The other company we looked into was Spherical from Thomas Perry. Really great guy and impressive what they're doing. Fully homomorphic encryption is also very hot. There's so much data today, and a lot of the data is getting spread out, getting leaked. And it's not malicious. It's just 50-year-old people, using ChatGPT, some information they shouldn't. So that's really a hot topic, encryption. And encryption, of course, touches on Web3. So in the Web3 space, you have huge competitors already in encryption. For example, Zama. Yeah, like I think their last raise was 75 million. I'm not 100% sure, but they're really doing great. Digital transformation to me has a lot of things in common with hardware, because between the software that is AI driven and the output, which is a service, for example, there is no tooling at the moment. So we have Elon Musk working on humanoid robots, I would say. I heard an interview with him where the one arm had like 24,000 pieces. So just imagine what is necessary
Yeah.
to be developed to get to that point where you have a tool servicing old people in a home. To
Yeah,
get
of
there,
course. It starts from the infrastructure, all to production, software, yeah, distribution. It's so many parts.
so you have reindustrialization. also really part of that hardware renaissance. And what is interesting there is, I think a lot of white collar people like you and me at KPMG at one point were really tired of looking at a screen and an Excel. And, why not work in a car factory where we have 10 KUKA arms that we have to, manage? It's also outputs.
The value creation is shifting in general, I
Yeah.
think, especially when it comes to, as you mentioned, white collar or blue collar. There are many opportunities. I don't know how they're going to be manifested in the startup world, in the investment world, but yeah, we want to do things that are more valuable now, not just administrative tasks that can be automated by AI. So.
And absolutely. And there is really interesting companies. There is another company that I really like, is called Snellium. They're based in Brussels, and they do optical control, like really for that manufacturing in automotive. And it's an insane race because there's not many players in that market either. And so what is interesting for ScaleFund is to find those niches, deep tech niches, digital transformation of all sectors. It's not that sexy. It's really sometimes, right, you're looking at a factory and 10 engineers working on something that doesn't seem at all marketable, and that's really where I like to be.
But the unseen industries are mostly the most important for infrastructure. We all talk about AI and all these things, but what runs the AI? We need the infrastructure. Simple things like the battery or anything like that gets overlooked. And as you mentioned, yeah, there should be plenty of opportunities in these spaces if you're willing enough to search for them. As we mentioned AI a couple of times, we cannot avoid this topic. We all know that from an implementation perspective, AI is not a bubble. People started saying in the beginning, it's not something that we can be implemented in a day-to-day basis. This has been misproven already. But I'm mostly interested to hear your thoughts about the inflation of investment in AI startups. We see every day multiple announcements. And do you think that there is validity to this inflation, or it just investors trying to get their hands to whatever they can to find the one, two winners?
I think it's not a technological bubble, but it could be indeed a more financial bubble. I think that's definitely possible. When it comes to AI, I think that SOTAs, like the bigger ones, every update they make destroys 10 to 20% of startups working on a certain topic. That's a race that, as a VC, you really have to make sure that what I'm funding has a crazy technological moat, a team that can execute fast. The competitive landscape is really where we put our time in. Like, okay, who are they competing with, and is there a way of winning here? I
Yeah,
think
it's
that
kind of a unique stage where your own infrastructure is also your biggest risk right now. So yeah, you are integrating with OpenAI or Anthropic, and then you don't know if they're gonna just make their own development.
And definitely, I think it's already impacting the market, job market as well. And what I think about most about AI is, we had the 1929 crash, we had the dot-com bubble, we had COVID, but a lot of the bigger corrections in the stock market came after a new industrial revolution. It was the automobile in 1929. What people tend to forget, it was really a big shift. Dot-com bubble, of course, it's
The internet.
it's internet, and I would say that blockchain didn't really have that much of an impact on the world. It has a high adoption curve, but it's not that impactful yet.
Yeah,
However,
in a more social level, yeah.
yes, AI is very, very, very impactful. If we follow history and we see what happened, and of course, past is no guarantee for the future, but it often rhymes.
When it comes to the funding itself, do you see or do you believe that there is a lack of due diligence because of the speed that the funding is going? Because I read a couple of points online by some investors that say that nowadays, especially in smaller rounds, and like 2, 3, 5 million, due diligence is non-existent because they want to get as fast as possible in, and that could be a huge risk going forward because you never know if the numbers will add up or anything like that.
Where the people talking about this 1 to 5 million rounds with no due diligence, were they European? Was that about the European market?
I think they were US based.
Yeah, okay, because I would say, first of all, big difference between US and EU. A 1 to 5 million pre-seed round in the US is common. In Belgium or France, Luxembourg, Switzerland, Netherlands, where we invest, not so much. The second thing is, I will never invest without due diligence. Just no. I need, we try, and it succeeds, to position ourselves in a month and a half. So in 1 month and a half, you have your term sheet and you can proceed. There will always be a minimal due diligence. We will have a couple of calls. We will send you a Q&A. We will look into your financials, business plan. Usually what we try to do for the startups, and that's kind of our promise to them, is you won't lose too much time with us. We do a stress test. We look into the MRR. We have to and knowing who you are as well, because it's pretty transparent, right? If you have a plan that is crazy ambitious, okay, says that you are that type of guy. If it is not ambitious enough, maybe it's not for us either. So due diligence is always, I would say, necessary. People not wanting to do due diligence can be for us sometimes a bit of a red flag. And if it's really that good, yeah, then we can move fast.
Talking now about the process, of the investments. You mentioned earlier that you source it through your network and trying to meet new people, and sometimes it doesn't work out. And this is one of the questions I want to ask you is it something that happens often that you, or in general, what you see, an investor wants to invest in a company and they get rejected? Because normally, you see the founders trying to chase the money and not the other way around. How common is it really that VC or an angel gets rejected?
It happens often. And I have had it happen to me where it was really hard to get in. And how it, for example, twice, I have two examples like this. One is Snellium. It was very hard for me to get in. And at one point, I just jumped on my bike to their offices that are like half an hour from here. And when I got in, I saw a couple of Chinese guys that the CEO was talking with leaving. And it was really, to me, validation. I was like, okay, who was these guys? And he's like, yeah, they're from China, coming in to look into the tech. They might become a client. And it was this moment of like, okay, I really want this. Through this little human thing of just saying like, you know what, I'm coming. It worked out. Um, Another one is Web3 companies like custodian for high frequency DeFi trading. There it was pretty hard to get in, and we all had to put in 30K. Otherwise, you couldn't join.
Mhm.
And then I couldn't get in for like 6 months. And here again, I accepted it. I was like, okay, you know what? You're Belgian guys. I really like what you're doing. And if I can help, I will. And that's what I did. I made some introductions without even having gotten a no. And all of a sudden, last summer, they reached out again and they said, like, listen, we're going to put all the angels at 10K and you can get in. And we got in again with and that's how it worked, because you just keep doing it, not expecting anything in return.
That's an interesting fact, because there's this misconception that only the investors call the shots and make the decisions, but apparently that's not the case.
I would really say that the best startups with my network, I'm not there yet. And those startups, they're not even crossing my site, like my desk. They are just funded by guys who are 45 to 55. That's kind of how I see it, that have crazy experience, who had this entrepreneurial exit and who then have their own VCs. They have a club of their own, and that's totally fine. That's how it works. And yeah, you can only work and hope that you get to that point as well.
You're working a lot in Belgium. You're based there, right?
Yeah.
Yeah. So actually, the way we interacted first was because of one of my posts about Ghent. And after some research, I really discovered how Belgium in general and Ghent itself are such a big startup hub.
Mhm.
And I wanted to hear how, if you know how it came to be, because you don't hear often such a small city or even Belgium as a country. I never heard that it's like a startup hub.
It really started, I would say, with a couple of bigger exits in the early 2000s, late 2000s, like that period. And exactly what I was explaining, guys who said, okay, we exited and now we're going to make a fund. And then there has been a couple of nice exits from younger founders, like One of the main ones is Henchman. They exited in I think 3 years and a half, 4 years. They went to 3 million in ARR or something like that, and they sold over 150 million. And that's a big success story, which puts VC back in the spotlight. And that created a cascade of people wanting to invest in startups, in funds. That's really how it went.
So it started from a similar concept from, exited successful founders, and it wasn't really driven by the environment itself. Maybe it's universities or the regulation or something like that.
Yeah, and I also think that it stems a lot from these guys who have exited really wanting to give back, and I really appreciate it because I think it's good for everyone. Yeah, and it's like in Belgium, it's the Netloch Mafia. They sold. I would say now that the henchmen guys are also a mafia, and they work together with the funds. They work together with the founders, and yeah, that's really where we should go. And I think it's really important in ScaleFund as well. We have exiters who put money back into the fund and they want to give back. Yeah, it's great to see, but it's something that has to be fostered everywhere, I think. And it doesn't always happen. You have founders who more turn to PE. They don't want to invest that much anymore. And PE is fine as well, right? And for the listeners who don't make the difference, it's more like PE is your Rothschild funds who will interact with companies over 100 million with positive EBITDA. So that's also a very good market, more stable market with interesting returns. I think there you can get 10 to 20% on a more secure base almost. But this is not fostering really the next unicorns in Europe.
It's mostly for people who want to remain active. We have seen something similar in Estonia as well.
It's a lot about the mindset. The mindset in Estonia is my startup needs to become a unicorn. And it's almost, you could say, a whole city manifesting success, and everyone is excited and everyone wants to help and everyone wants to contribute. And I think the legal environment also has to foster growth. And in Belgium, for example, we have a big problem with ESOP, like option pools. We need to, when you get an option plan, you actually have to pay for it. The government considers that to be you getting a salary. But you and me know that if you're joining a startup in pre-seed seed, one chance in 10 you succeed, nine chances in 10 you die. And if you have to attract talent from the US, it is a bit of a stretch to explain this to them. So you have to pay huge salaries to attract that talent with that network, across the pond. Makes it hard. This is one of the things. But for example, also we have a lot of social security in Belgium that is really not good for startups. For example, when you have to fire someone in Belgium who's been with the company for a long time, you have to pay huge, I will call it compensation plans. Yeah, that doesn't work. If you're a startup who's about to die and you need to cut costs to a maximum, but
The
everything
absolute
that is there,
flexibility, yeah.
yeah, you have to pay 20K overall. Like, yeah, it's just killing you. These things, I think, has also fostered complacency with certain employees. And that phase where you really scale up, it happens that you have to leave behind part of the team that doesn't want to go there or that doesn't have the interest to go there. And that's really problematic for our growth.
I want to focus on the network effect and the mafia concept. Yes, from one side, it creates a lot of growth, a lot of potential, next phase. How difficult is it for you as an investor to potentially get into one of those deals because there is this bubble or network, and maybe they work only between themselves? Or do you see that they're more open to involving external people?
I would say it really depends. It really
Hmm.
depends, and it's definitely not easy if you're not part of that mafia, because why would you go to someone that only from a couple of events and others? The way I look at these things is really, you know, focus on what you're doing yourself, have a good fund, and it will come. That's how you have to look at it. And if we have good startups, and I tend to share some deal flow, and that's how you create bridges. But I don't think it's by being, like angry or pissed off or jealous that anything good comes. So you just grinding and go for it, and that's it. It's about the little things in life, like You don't get things handed out to you. Like it happens, but it's rare. So just try to get where you need to get on your own, and surround yourself with good people, and good things will happen.
In the topic of grinding, what do you think about bootstrapping to lengths that are, maybe to 30, 50 million ARR? Is it something that is achievable, advisable? Because we have seen companies doing it, but it's very rare.
Bootstrapping is something, if you want to do it, you can do it. Surround yourself with the right people. It touches back on that question of having private money on the table, having the right advisors. I think there is a trade-off to make. But if you're an entrepreneur who's already done it and who's already has a team that he grew a company with, you can bootstrap. Of course, do it. I think it's more the opposite way, where you have a VC telling you, and I had it when I was supporting startups in the past. Like I've raised for a lot of startups, helped them, and I was part of startups where it's not nice when I was doing the raise and you're talking to a VC and they're telling you like, yeah, wait another 6 months and come back. You get 99 no's for one yes from a VC, you could say.
Yeah.
Um,
It's like looking for a job.
yeah, when you don't want to do it, it's not nice, because it's really like, yeah, I'm my limit. I don't have more money. I have bills to pay. But on the founder side, it really depends on who you surround yourself with, and if you want to do it and you can do it, yeah, of course, go for it. Why not?
I wanted to ask something about operations because you have also experience with that. How difficult is it, and what would be your suggestion for a founder or an executive team that transitions from the startup mode into a more mature one? It's a totally different ball game. Then you would need to start having your process documented, due
Uh,
diligence, admin, and some people don't have an issue in the transition, but we see a lot of people struggle with that structure. Do
of
you have
course,
any advice for that
I really like the chief of staff position for this kind of scaling.
transition phase? Yeah,
Yep. And I think you should find someone who's done it before, someone who can really help you with fundraising, with company culture, that part of you focusing on the strategy, keeping the growth in sales. And then you have this operational person who will translate what you want, where you want to go, into the operations. That's a good position to have a good COO, but also a CFO is also maybe that time where you're like, okay, I need a full-time CFO, someone who's really going to help you put in discipline. And I've seen companies where it went horribly wrong because there was no governance. And for me,
yeah.
well, being 33 years old, governance was something that I didn't put that much attention to as an investor, because I was like, okay, if there is a board, we are good. If it's well structured, it's better. But I kind of left it there. And now with one particular story where I got a lot of pushback on the board, I was not on it, and I got a lot of pushback from the founder. Like, we have a board, everything is fine, and then months later, things are really going south, and I really pushed hard. At that point, I'm like, okay, what is happening here? And I found out so many issues, and actually this company never went through that scaling phase,
Yeah.
like senior onboarding senior people, leaving other people behind. And yeah, it's really a sad story, because it's a beautiful product they built. They had great revenue in the past. They closed nice deals, but now we are seeing that the company, 50% of the people had no output. They should go to another organization to see how it's done, and then they should have come back if they wanted to. But actually, they stayed and they became complacent, and nothing changes. Right? Nothing changed in that scaling phase. And should they have had hired like a senior CFO, senior CEO, senior whatever, there would have been a better bridging the gap. And I think it's hard. It's not easy for a founder to say to someone who was in your company for a long time, like, listen, we need to level up. We need to put your salary into someone more senior. But it's a discussion you need to have. And I think there it's important as investors to be there to do that, to say like, listen, scale, and be considerate, obviously, but if you want to, it's about the company in the end. And if people have option plans, it's in their interest as well to have this discussion. But okay, this is a extreme case. Usually these things they work out, and you just need to be well surrounded again.
So it's mostly surrounding yourself with the right people and hiring the right people and not trying to, you know, figure it out or find the solutions necessarily within your own organization. As the next point, I want to give you the chance to highlight or shout out a couple of startups that you think or founders that you think that currently are doing great and that deserve some more exposure, because we see a lot of specific startups getting all the spotlight right now and a lot of them go under the radar. So you have a couple of companies or operators that you would like to maybe showcase.
Yeah. So in terms of startups, there is Snellium, which I obviously like. That's for your more traditional audience. It is really for the automotive, for medical devices. It's optical control, and they have built hardware and software that really is extremely precise in seeing detailed mistakes, you could call it. Like in a windshield, one little, default, and it has to go. Because with the cameras that are in cars today, it can have huge impact on security and on visibility. But also, like they can discover, which is insane, a piece of dust in a Baxter of blood, stuff like this. That's a startup that I think is really competing as well for the age it has, where they are, the contracts they're signing. It's pretty impressive. In a traditional world as well, you have Hyperfox. It's a startup that is really really working on order management and optimization. And why are they interesting? Because in bigger companies with huge contracts, we have 15 people looking at the order that we got from this client. Does it reconcile with the contract we have with them in terms of Incoterms, volume, specifications? And Hyperfox just automates this. Why? Because you have 15 people doing this, and all of a sudden you only have two more people doing this. So this is really where, yeah, AI is, taking away jobs. In more, Web3, you have Engrave, which is a hardware wallet, and they are now also working on custody for institutions, which is, yeah, I think a good leap and a good way to go. You have Cryptify. Cryptify is Matteo Janssens, which is custody for high frequency trading. They're a spin-off of Keyrock, the liquidity provider. Mika is also a big challenge, I would say, if you're in crypto. And for anyone using Chainalysis, Chain Comply is two great founders as well, Pavlina and Lukas Lukaszewski, and they kind of combine their software with Chainalysis to give banks an idea of the risk profile of your client. Because I think if you have crypto and you have to bring it back to the bank, from what I hear, it's not that easy. And the banks now, they don't have the luxury anymore to say no to everyone, because I think there's a lot of people offboarding. And so they will really help banks in, staying compliant, which I really like. Other ones that I think about is Pelican. It's a Ghent-based startup. These guys have already exited a couple of times. They are a ranger of data. They create transparency, and they are really growing fast. And to me, this is kind of an exit to an Atlassian group or something. They're really worth looking into as well.
Potential guests.
Yeah, definitely, definitely.
Great. That's awesome because to be honest, most of the ones that you mentioned, I haven't heard, and I guess most of our audience haven't heard. So now they're going to have a chance to make some research and find them and follow them and their journey. Great. So as a last part, something that I would like to do is if you can share with us either a software, a product, or an activity that's lately has improved your life and you would recommend to our next guest.
Okay. What I think has really greatly impacted my life is, for the last 10 years, I've been writing kind of a diary. I don't have time to write too much, I write bullet points of what happened, what I was thinking about, and it helps create a lot of perspective. And also, I finish it always with a bit of a, not a bit, like I write thankful for, and I write at least a couple of bullet points, because it's really easy. At the beginning, it was hard, but then really quickly, it was like, okay, it's not that hard. Another one that I really like is walking. So I walked a couple of times to Santiago de Compostela, but also bigger trails like the Tour du Mont Blanc, but also the Pacific Crest Trail. Take some time off to go walk. It's not time lost, really. Like, you will come to your senses about some of the things you're doing that are not that healthy, or things that you think I should do more. But you're also going to meet a lot of interesting people. You don't have a lot of people that can free up 6 months of their life or a month of their life. Usually they've had something great happen to them or something really bad happen to them. But it puts you in that category of people with an interesting life, and that's really something that I think is worth doing. And, like, being nice, it sounds maybe a bit stupid or cliche, but I would say if you lend a hand to 10 people, 2 might bite, but 8 might be, thankful, and it brings good energy into your life.
Especially nowadays, everyone lives in their screens, and when you go out and you meet new people and you interact and you see that you do have an interesting life in their eyes and you discover different perspectives, it really gives you clarity, as you mentioned. I think that's some great advice. Great.
Thanks.
Thank you very much again, Thomas, for joining us
pleasure.
as our first guest. And if you're open to it, we would love to have a second session with you sometime in the future.
Let's do that.